Hi guys, this is my first YouTube video and talking into this camera is super weird, but I'm just gonna hope I get used to it. Now, I'm Michael and I'm a Forex trader and I've been trading Forex for 3 years now and I've been profitably consistent for over a year, so I just thought I'd start making some videos. Now, we all know that there are way too many Forex know-it-all gurus already out there, and I promise I'm not just going to be another one of those. No, but in all seriousness, I'm really going to try not to be like all of them, because a lot of Forex YouTubers' videos are so boring and so long. So yeah, let's just get into it. So in this first video, we're going to talk about free touch patterns. And the reason I'm starting with this is simply because they're really easy to use and they can be very lucrative, as they can give some massive drops or some massive pushes up in price. So let's jump straight into it. So what is a free touch pattern? A free touch pattern is simply just a pattern with two trend lines, one drawn in across the lows of price and one drawn in across the highs of price. And one of those trend lines will have free touches on them before price either drops or pushes up. Now, depending on which way you're looking for price to go, will depend on which trend line you want that third touch to be on. If you're looking for a buy, you're going to want free touches on that bottom trend line. And if you're looking for a sell, you're going to want free touches on that top trend line. So all you have to do to actually plot these patterns are just find two clear relevant anchor points along the lows of price and the highs of price, and then just go and draw your trend line in across the wicks of the candles along those anchor points. And then you'll be looking for that third touch on either the top or bottom trend line to take your entry. Now, if you just went on your charts and started drawing in trend lines across every single anchor point that you find, you're going to have trend lines all across your charts and you're going to have loads of different patterns, and it's just not going to be fun and it's going to get super confusing. So to avoid this, you're going to be looking for a few main things so you know exactly what pattern to plot and it has the highest probability to play out. So the first thing that you're going to look for is for this pattern that you've drawn in to be flat, or you're going to want to look for a slightly ascending or descending angle to it. If you're looking for a buy, you're going to want a slightly descending angle. And if you're looking for a sell, you're going to want a slightly ascending angle. Now, the reason that you're looking to take entries on these flat or slightly angled patterns as opposed to steeper patterns is because these flat or slightly angled patterns are just more probable to play out, and they play out a lot smoother. As what tends to happen with these steeper patterns is that you won't just have free touches on that top or bottom trend line before price pushes up or down. Instead, you'll have multiple touches before price even commits. As you can see here with USD yen, we have this much steeper pattern drawn in, and on that bottom trend line, you don't just have 3 touches and price pushes up. Instead, we have 6 touches before price does anything. And knowing most traders' luck, what might end up happening is you end up taking this trade, and this trade that don't really commit. You may get a break even or maybe a small bit of profit, and then you end up missing out on this trade here that absolutely takes off, and that'll be super annoying, and I think we all know exactly how that feels. One quick tip for if you do still find yourself taking these steeper patterns, because you don't have to listen to me. If you want to lose trades, that's up to you. You can do whatever you want. However, what you can do to avoid losing as many trades is, instead of taking the entry at that exact third touch, wait for a push up or push down followed by some confirmation, as that way you avoid being tagged in and out as much. So the next thing you're going to look at is the positioning of that top and bottom trend line. So what you're looking for is for that top and bottom trend line to mirror each other And you're also looking for there not to be a massive angle between the trend lines. So as you can see here from all these patterns that do play out, they all share the same characteristics. So you can see that those trend lines pretty much mirror each other dead on. Obviously, it doesn't have to be perfect. You don't need to get your mirrors out on the screen checking, but just to look at, you can see that they are mirroring. And also, there just isn't a massive angle between the trend lines. You can get slightly expanding patterns that look like this, and they do work. However, you really do not want your pattern looking like this or looking like this, because these patterns really do not play out, and you'll just end up losing a lot of trades. So the next thing that you're going to be looking for when it comes to plotting these patterns is for your pattern to have come from a clear push in price or your pattern to a significant level. So the first thing that I said was you're going to be looking for a clear push in price. If you're looking for a buy, you're going to be looking for that clear push up followed by your pattern. And if you're looking for a sell, you're going to be looking for that clear push down followed by your pattern. Now, the reason you're doing this is because if you look at your charts, you're going to notice that price often pushes down and then there'll be a pullback of some kind before price then reverses and follows in its original trend. So these free touch patterns are just a variant of those pullbacks that give many entries and are very probable to play out. So the clear push just works as a confirmation, so you know it's very likely that that pattern is just a pullback. The other way you can look to take these patterns are to your significant levels. Now, obviously, we all use different strategies. For me, I often look for them to my double tops, my double bottoms, my Fibonacci levels. But if you use support, resistance, even indicators, it doesn't matter, just backtest it and have a look. Because what you'll probably find is that third touch of that pattern will line up very well with your level. Now, the last thing that we're going to look at when it comes to plotting these patterns is the overall size of the pattern. Now, these patterns come in many different sizes and you can take entries on them all. However, for me, as you can see here with Aussie dollar, I tend to focus more and take more entries on the smaller to medium patterns rather than those much larger patterns like I'm plotting in here. As you can see, I'm not zoomed in too much. I can still see a lot of price. I can see all the pushes down. I can see the pullbacks. And at the time, this is just relevant price. And these are the patterns that I like to trade. However, now if I go and zoom out, you can see that I could have actually had this much larger pattern drawn in and I could be looking for that third touch. But price never reached that third touch and dropped before. And this is what happens a lot with larger patterns, and that's why you don't want to be focusing on them too much, because if you put all your focus on price getting to that third touch there, you're going to miss out on a lot of opportunities in between. And if it doesn't reach that third touch and drop, you're not going to catch that big push down anyway. Like as you can see with this one, it didn't actually get to the third touch, it just hit the double top and then dropped. And again, if you were really focusing on price coming back up to that third touch, you would have missed that when price actually broke, it just created another smaller free touch pattern before price continued down. Now, I'm not saying that you shouldn't be plotting these larger patterns and you shouldn't be looking for entries on them, because when they do actually play out, you can reap some massive profits as they usually drop so far or they take off. However, they just don't play out that often, so you don't want to be focusing on them too much. And also, when these large patterns do actually play out, you'll usually find that the reason it does actually end up dropping is because of a smaller pattern inside anyway, as I'm going to show you here with USD CAD. So if you backtest USD CAD, you're probably going to see this pattern here. It's a clear push, you've got that clear pattern and then that clear push down, some lovely profits, everything's groovy, everything looks great. However, if you actually dive into it, you're going to notice a few things. First off, when it comes to that top trend line, there's actually a few places you might have had it in, because you could have plotted them in here across these highs. You may have had your trend line plotted in here across those highs, or you may even have had it plotted in like this, and there's no real way you would have known which one was right And there's only a couple places you could have had it so that it fit perfectly with that third touch. Only in hindsight does it look really simple. So you would have had to have got a bit lucky to line it up that well. Whereas if you actually come forward and look here, you'll notice that Price actually broke the double top with this smaller free touch pattern anyway. So regardless of whether you actually had that larger pattern on, you could have caught the move. It literally didn't matter if you had the large one on. Again, another example, if you look at Aussie Kiwi, you'll notice this one, yes, you definitely would have had the right trend lines in. It's quite clear to have your top trend line across these highs. However, when it hit that third touch, it didn't just drop, it pushed down a little bit, and then it's just arced round, hit the double top, and then dropped. But what you'll see is that there's actually a smaller free touch pattern to that double top anyway. So again, you didn't need the larger pattern in. Now, again, I'm not saying that you can't plot these large patterns or take entries on these large patterns. I'm just saying don't focus on them too much, because yes, they can give you some massive rewards. However, they just really don't play out very often, and you really don't want to be relying on one big trade to make your year. So that's everything for my first video. If you now jump on your own charts and you start plotting these patterns and using everything that you've learned here, you should be able to just start making some profit straight away. But I hope you enjoyed the video. I hope that my voice wasn't too monotone, and I hope that the editing wasn't too cringe, but I'm sure that it will get better. So yeah, see you in the next video.